Okay, so here's the final test. If we did everything right, then we should be able to balance out our balance sheet. So this is a snapshot in time, so I'm just doing the totals for June 30th. So I'll start with my current assets, and I have cash, accounts receivable. If I had any prepaids, they'd go here as well. Then I also have my raw materials inventory account and my finished goods inventory account. So the cash actually comes off of the cash budget. So if I go equals and I go onto my cash budget, it's the ending cash that I want. So it's that 43,000. So I'm just going to link it to that. Now my accounts receivable is, if I go back up to my cash receipt schedule, and hopefully I did it. And so I'm just looking here, and this is the amount that I'm collecting in July. That was from June. So that's my receivable amount. So I'm going to put that on my budget. So that's why I included the July column. So my raw materials inventory account at the beginning is, or at the end, now I'm not sure if we actually converted that into dollar amounts, but let's just take a look at our schedule. And if not, it's easy to convert. So if I go up to my material schedule, and I see that my desired ending inventory is 11,500. So that's in kilograms. If you multiply that by the 40 cents per kilogram, then that will give you it in a dollar amount. So 11,500 kilograms times 40 cents will give us 4,600. So that's how I calculated the raw materials inventory. And then the finished goods inventory, I already calculated that when I was trying to figure out what my finished goods ending inventory was. So I'll just go up to that. So 24,926 is where I'm picking that number up from. So in this question, I don't actually have any other current assets. That might not be true on other questions. So just keep that in mind, that this can look a little bit different from question to question. So total current assets. And now I'm going to list my non-current assets. So here I just have property and equipment. So let's see what I have here. So I don't have a starting balance sheet, so I can't add to that and make my adjustments. So let's see. It says I have land of 50,000, common shares of 200, and retained earnings of 146,150. Okay, so I'll put those down here. So I don't know how much this is, so I just have to leave it for now. Oh wait, that's just my subtotal. That's just my heading. I don't know how much the equipment is, so I'm just going to leave that for now. I'll just put that in gray. So they told me that my land was 50,000. Let's just put in a number for now. Let's just put $100 in just so I can do the formulas in here. So I'll say total property and equipment is 50100 because I just put that fake number in right there. So now I'm just going to add up my total assets. So that's the total current assets plus the long-term assets, and that'll give me my total assets. Now remember that assets have to equal liabilities plus shareholders' equity. Now, if I was given an open-end balance sheet, then all I would need to do with the equipment is take my equipment balance net book value at the end of the year. Then I would add in any of my purchases, and then I would subtract out my depreciation. And then that would give me my ending equipment at the end of the year. But what I'm going to do is I'm just going to work backwards and plug this number because I do have the equity amounts. So with my liabilities and shareholders' equity, let's call this current liabilities. So my accounts payable actually comes from my direct materials budget. So if we go back up to that one, and if we go to the cash disbursements budget, if you remember that half of June's materials is paid in July, so I'm going to pick up that $28,400. And then they told me in the question that my common stock was $200,000. And then my retained earnings, did they give me that amount? Let me just go check. So they told me that my opening retained earnings was 146,150. So with retained earnings, just remember it's, let me just put this in, 146,150. So you take opening retained earnings, add in your net income, and subtract your dividends, and then that will give you your ending retained earnings. So I'm going to add in my income after tax. So 239,485. So let me just see if I took that right. 146,150. $146,150. Perfect. Sorry, I'm making you guys a bit dizzy going through all the schedules. And now I have to adjust out my dividends that I paid. So that comes from my cash budget. So let's just see if I paid any dividends. So yeah, I paid the 29. So let me just subtract that out. So I have opening retained earnings plus net income minus dividends gives me ending retained earnings. And then the common stock, I'm just assuming that it didn't change. And in this question, I didn't have any non-current liabilities, so I just have my current one, and I only have one. So if you had more than one, you would list them. But you guys know how to put together a balance sheet. Okay, so here's my current liabilities. Here's my total shareholders' equity. And then I'll do a total liabilities and shareholders' equity. So that's your 536,635 plus your 28,400. So I have 565,035. So technically, your equipment, so I'm just plugging this amount. So if I compare my total liabilities and shareholders' equity to my total assets, I know those two numbers need to be the same. So in order to plug that, what I need to do is take 565,035 and then just minus out the 197,526. So this one is just a plug, but now you see that they both balance out. What I would really say though is this technically should be your opening net book value from your balance sheet. Then you would add your purchases, and that would come from your cash flow statement, and then subtract out your depreciation, which came from both our manufacturing overhead spreadsheet and also our selling and administrative budget. And then that would give you your equipment. So I really don't want you to plug the amounts, but because they didn't give me any opening amounts, that's the only way that I could balance out this balance sheet. Okay, looks pretty good to me.